Inflation, it's only temporary, right? You came here for the truth, so let me unveil that for you. This is the story that we've been told for so long, and yet people still believe it. The very first thing we need to discuss is the stock market. In the previous trading session, the market came down quite a bit. We're seeing a lot of red. It's truly been a sea of red. Number two, we're going to talk about the different sectors, which are performing well, which are cheap relative to history, and so on. And then number three, we're going to talk about recession. Spoiler alert, it's finished. Apparently, officially, the recession is over. I'll show you the details around that and so much more. Let's go. Quick update on the repo markets. Haven't been showing you this. You could see in the most recent day, this is the maturity date of July 20th, 860 billion for the reverse repo operation. This is the second highest. We still haven't got to that 1 trillion. I'm rooting for them. Let's do it. Let's do it. All right. Now, by the time you're watching this video, the previous trading session, the Dow went down. I believe it was 725 points. I've got it up over here. S&P was down a little bit as well, NASDAQ. And you see all the markets coming down all at once. Basically, everything dropped. I'll show you the actual charts in just a second. And immediately I found the CNBC article, which was too funny not to include. I got two jokes to show you today. This is one of them. Do's and don'ts during a stock market sell-off. Okay. Basically what it says was, you're investing, don't worry, everything is going to be okay. The market always goes up. I mean, this is actually propaganda. They want to ensure, like, these articles are ready to go. That article probably wasn't even written today. That article was simply there. The next time there's a correction, they do this. And it's done on purpose. And it's truly, truly unbelievable how they get away with this stuff. Because they're trying to take these less sophisticated investors and give them information that they don't need to know. You did not need to know that, especially at that moment. They're trying to reinforce that belief because they've got advertisers, they got bills to pay. I get it. But you're not really helping people unless you give them the truth. United States government bond 10-year. This has been coming down right around here was the peak. And that looks like March 31st has been coming down ever since at 1.19. So, there's a lot of talk about, hey, it's deflation in the bond market, and we don't really know because of the manipulation. But you could see the 2 and the 10-year yield spread, that's coming down. Looking at that back in 2019, it was all about the resurgence. As I've said before, you could see a dip below zero. And then, it came up ever since. Now it's coming back down. Will it go back to where it was? I think that things are so messed up because of the Federal Reserve intervention that a lot of these indicators are kind of broken. But anyway, this is the S&P 500. That's the red line. This is showing you the 10-year yield. They have diverged as of, let's say, April 2021, the consideration perhaps that they might end up coming back. So is that the 10-year yield starts to rise? Is that the S&P 500 starts to correct for a while? You look at, most importantly here, what Goldman Sachs has done, and they've sold $5.5 billion. They've sold, I think it's 20% of their portfolio previously. And we'll find out, of course, in the coming months what they did in this period of time. We're always getting delayed information, but I think that's significant to sell. I think it's 20 or 25% of the portfolio. I've done a video about it. Speaking of Goldman Sachs, this comes directly from them. Some sectors look cheap compared with the market and their history. So if I pull up the highlighter, I'll be able to show you this. In this quadrant right here, cheaper than the market, but expensive compared to history. Automobiles is in there. And then you can see in the bottom one, I found it funny, autos excluding Tesla, that's here, cheaper than the market and cheap compared to history. So you look around, real estate, utilities, banks, metals and mining, energy, and of course there's percentages and so on. I can't get into all of it, but if you want to check this out, I would highly recommend, just to give you a little bit of mental insight as to where the markets are, and not the general broad market, but breaking it down by sector. The way that you should be investing, the most prudent way to invest, is you first look at the fundamental factors. What's happening? And you could see the Federal Reserve is printing money. They've got low interest rates. There's talk of inflation and so on. All of that is considered to be bullish. Okay, we know that there's structural problems. That's a whole different story. Then you come down one level. How are the broad indexes doing? Okay, they are generally moving in an upward direction. Great. Let's look at the sectors. You break this down. Which ones are undervalued right now and which ones are poised to do better in the near future? Great. Then we take within that sector, we go down to the stock itself. I'm calling this the paratrooper trading strategy, because you see it from 30,000 feet up in the air, and you sort of bring it down to a level that you can see better at. Okay, so if you're just taking an individual stock, you got your blinders on. A lot of people do that. So you can see this here, and I'll show you the charts in just a second. 22 stocks, including Carnival and Zoom, that are down 30% or more from their 52-week high. Other stocks way off their highs include Baidu, Peloton, and United Airlines. The airlines are down, cruises are down. This one here in particular, Baidu, because you're looking at Tencent, Baidu, Alibaba. These particulars had seen massive inflows. I just covered that in the video yesterday. Massive inflows of cash. Cathie Wood had sold off a bunch. Everybody is keeping an eye on her now for some reason. Carnival, this is their stock right now today. You could see that it has been in this downward trend since June the 9th. Practically almost every single day. The market's been moving up, but Carnival and of course other airlines hadn't been doing so well. I don't have any up right here. Looking at the tech stocks, you could see this had broken down below the 20-day moving average. This red line is a 20-day moving average. Broke down below that, and of course that looks weak. But as you're watching this video, it wouldn't surprise me. This is the S&P 500. It would not surprise me to see the S&P 500 and the rest of the markets boosted up a little bit. The futures had looked positive before. By the time the market opens, who knows? But it did find support around the 50-day moving average. Okay, so keep an eye on that. You could look at gold, 1817, as I record this video, it's finding support around that 50-day moving average. And looking at oil got punished. Okay, it is, as of this recording, $66 a barrel. It was at, let's say $10 more, about $76 a barrel. So I'm interested to see where this goes. I think that it's important to follow this historically as well. I'll get into more stuff, but first, let's look at the Money GPS insights. Number 1, markets got spooked, but we'll just ignore it. Number 2, investors are falling into the same traps as they've done before. This goes for real estate, this goes for stocks, and just about everything else. Number 3, it's pretty clear, but the central banks are unable to actually fix anything. It's simply a matter of the Fed will be there to save us, but nobody really knows what the future has in store. Take a look at this. I think it's amazing. Jim Cramer's Winners of the New World, year 2000. There are a few companies in here, and I'll bring out the highlighter so we can take a look more closely. And you can see the name of the stock, the price then, and then after. And you will see something interesting. A lot of these companies, minus 99, 94, minus 94, minus 100, 99, 99, 81, and so on. All of these got punished, and these were on Jim Cramer's list. Hey, it's a new world, guys. It's a new world. This is the way it is. Technology is the way to go. So these are my favorite picks, and they did well up until the time that they didn't. It's just the way it is, okay? So, on the way up, everything makes sense. You got to watch out. I would advise everybody, if you are investing, there are 2 books you should read that are I want to call them mainstream books, but that'll help you get a little bit of a much better insight into investing. And that is Tony Robbins' book, Money, Master the Game. That's what it's called. And then Ray Dalio's Principles. You don't have to like either person. Don't read a book because you like the author. Read a book because of the information contained within, and you can get the audiobook in either version or the physical book. But the point is, these two help you get a better insight into the investing world and what I would consider to be more prudent than what the recommendations you will hear. There's a lot in here, but I just want to touch on this one point really quickly. So I was talking about knowledge versus experience, the market manias, and so on. And this is, by the way, out of Real Investment Advice. The euphoria that we have today, there's many reasons they talk about this and what's happening. Commission-free trading apps, mobile apps, retail trading has exploded. Surge in the IPOs, SPACs. Investors are paying record multiples and prices for money-losing companies. Option contract speculation has been, record increase. The margin debt is at new highs, near annual increases. And don't worry, the Fed is going to fix it. And I completely agree with their analysis here and the way that they present it to people. It's true. It's really true. The way that, this very unusual mentality that people have that, oh, don't worry, somebody else is going to fix it. I don't need to think about that. Risk parity. Learn what that is. Investors bet on grocers like Kroger and Costco. I thought this was interesting. It actually shows you that Costco has done extremely well. And that just goes to show you that certain stocks can do well during these times. Costco touched an all-time high of $415. It's interesting just to see that, the dynamic here when there's a sea of red, but a few companies performed well. And in fact, I think NVIDIA was up on the day. Yeah, you could see that, finding support at that 50-day moving average. But anyway, it all, you take it day by day, and you got to really broaden your perspective on it. How are you investing? Are you a swing trader? Are you a day trader? Are you a long-term investor? Are you looking for dividends? You can't, they're so narrow-minded sometimes. You got to know what your goals are, okay? U.S. recession in 2020. This is a comedy session number 2. U.S. recession in 2020 lasted 2 months. Okay. Determination of the April 2020 trough in the U.S. economic activity. Really good stuff here, guys. Really good. You don't have to listen to, stand-up comedians. They were giving it to us right here. This is funny here because it's real. It's true. NBER is the group that determines when the recession started and that's what they do, okay? And the funny part was financial crisis, it took them exactly 12 months to declare a recession. So the recession had already started. 12 months later, they said, oh, by the way, recession started. So it's a completely illegitimate company or institution or whatever you want to call it. They actually say April 2020. The last month of the recession was April 2020, and May 2020 was the first month of the subsequent expansion. Now, there's different definitions of recession. 2 quarters of negative growth, 2 months of negative growth, whatever you want to call it. There's still a recession on today. I don't think I pulled it up here, but you've got 14 million people on some sort of economic stimulus. 14 million people. That doesn't include the people on food stamps and all the other programs, okay? It's a joke. Come on. The new real estate normal, this entire article is talking about how just normal houses in normal areas, suburbs, cities, wherever, that are just going for ridiculous prices. People are writing love letters to the sellers. Hey, buy my thing because, I've got this condition, or my family lived here for 10 years or whatever. There's all these different reasons, but it's going berserk. It's going berserk. Higher interest rates will definitely hit that hard. Home buyers aren't seeing savings from falling lumber prices. And so they peaked out at $1,670, came down ever since. They show you here steel mill products used as inputs to steel building materials jumped in price by about 70% in the first few months of 2021 and have yet to level off. There's a disparity in between particular commodities. You've got to address that for what it is. Nothing goes up at the same time, there's always a delay in between the futures price and the price you see at the store. So of course, you're going to have these delays, big delays. And a lot of times the price just never falls back down. You, as the consumer, have to pay more. This is the housing market index, which has declined. Why? It's not the price that's declined, but the conditions have declined because, why? Prices are too high. Inventory is low, at least what they tell us. This is worrisome, I think. You let me know in the comment section below. China is buying up American farms. Washington wants to crack down. Bipartisan pressure to stop foreign nationals from purchasing American farm operations and receiving taxpayer subsidies. I don't know. I don't know what's going to happen because they obviously want foreign income to be coming in. Speaking of China, Evergrande resumes its downward spiral as investors prep for the crisis. I talked about this developer in China. This has been, I don't even know if it was 2021, but there were a few companies, big companies that were going down in China. This happens to be one of them. And clearly we are here, perhaps at the end for this company. Peloton says it's preparing to enter the video game business. I guess they're gamifying the whole industry. We'll see, because they really led the charge in basically taking a tablet and sticking it on a stationary bike and charging people $3,000 for it. They've done very well. Their stock has done very well. So that's the name of the game. All right. If you have not joined the Insiders, you've got to do that. You have to join the Insiders because that's my way to get to you. I hear from people every single day, and I know you've heard me say this speech before, but seriously, you could look in the comment section, people every single day. I put the notifications on, I click the bell, I don't get your email. You've got to do that. You've got to try to do that still. But as an extra layer of security, you sign up to the Insiders and I will email you the video of the day. It's available for free, of course, at themoneygps.com. If you haven't already, hit that thumbs up button. You've got to do that to support this channel. I appreciate it when you click that. We're trying to basically push through the algorithms which have pushed my channel down, which is unfortunate, but there is a way to sort of force it to happen. You got to hit that like button. You got to share the videos. You got to sign up for the Insiders, and we get the outside traffic coming in because they do like that. If you haven't seen this video already, you've got to check it out. Click it and I'll see you there.